Three things you need to know living in Silicon Valley. We're starting right now. Hey, I'm Vito Scarnecchia with Apatano. Today we're talking about three things you need to know living in Silicon Valley. One, interest rates. Interest rates are probably going to come down about 6% by the end of this year. At least that's the thought. That's the idea. That's the projection. And where are we going with the impact on consumer insurance or homeowner insurance? What does that mean to us, et cetera? And what Freddie NAR forecasts also 6%. But also we're talking about fraud and the top 1%. Let's just jump into 1% real quick. I thought that was pretty interesting. And why this is important, because we always talk about averages, right? We always talk about people, what the average American makes is $40,000 a year and how unaffordable it is. Well, a majority of people that live in the western states or the coastal states can afford a whole lot more. Like Connecticut, in order for you to be in the top 1%, you have to make almost $1 million a year. So it's right there. Boom. California, 850,000 to be in the top 1%. It really depends on where you live. Now, let's talk about Mississippi. You only have to make 380, which again, it's top 1%. Now, understand the top 1% caters to a different lifestyle. And we're not just talking about 1%, we're talking about the top 5%, the top 10%. And when you're at 844,000, if you're the top 10% in California, you make, I think it's 360 or something like that. And it just makes it for why or how people are affording these $1 million plus homes. And I want to jump into that really quick, show you the top sales, the top most expensive house sold in Santa Clara County this week is in Palo Alto on Lincoln Ave. Now, again, these are not my listings. If you want to take a look at these listings, I will give you the MLS numbers and you can take a look at them. All right. But this one's nice. It's in Palo Alto. Palo Alto has a different little style to it. It's not the stylish gray and what have you. It's every house has a different style to it. And this one's more country-esque. This their colonial style, this right here, even though it has portico walkway, which isn't necessarily an attribute to colonial, but that's what makes Palo Alto special, right? Beautiful pool, very porous portico type style walkway, pavers. It's a little hangout room, sunroom. Now, this isn't the most impressive house. I want you to hold on for a couple minutes. It's a beautiful house. It's large. It's 6,100 square feet, 6-bedroom, and 2.5 baths on a half acre. So yeah, pretty big. In the middle of Crescent Park, which is one of the preeminent areas to live in Palo Alto. Let's take a quick look at this guy right here. It's the lowest sold house is $850,000, which came in at 20%, 106% of list price. Short Ridge. Let's go back over here real quick. I drop down. There. Okay. So you can see a little bit more. 758 square feet. 758 square feet. Crazy, right? $1,100 per square foot. That's just the way things are. Now, where is this? This is south of Stevens Creek, San Carlos, right? And Googleplex will be right over here, I believe. Yeah, that's about right. No, I think it's like right here. So anyway, $850,000. That's what you get for $850,000. 2-bedroom, 1-bath, 758 bungalow. Crazy. All right. The highest list price over sales price ratio. 3-bedroom, 1-bath. It's in Yorkton. Listed at $2 million, sold for $2.5. Now, this is over, technically, this is like Saratoga area, right? So Saratoga's proper is right here. This is still San Jose, still paying San Jose taxes. But yep, standard ranch house. Just depends on where you live, right? I sold one of these earlier this year. This one's rather updated. Doesn't have the Saratoga or Cupertino zip codes, so it's San Jose proper, which if this was Cupertino, probably would have sold for closer to $3 million. Because look at, okay, so this is the house I want you to look at. This is beautiful inside. Look at the flooring, completely updated, light, bright, airy. You have the lights coming in. I know it's kind of gray, but that's the standard shtick. Look at the tile backsplash. Beautiful cabinets. This is a beautiful house, guys. Nice professional range there. Built-in refrigerator. Everything was customized on this house. You can just tell. This is a beautifully updated house. All right. 8 days to sell. 1,700 square foot, 3-bedroom, 2-bath. That's what you get for $2.5 million in West San Jose. Beautiful. All right. The last one, let's take a look at this one. Oh, yeah. Morgan Hill, my favorite little town. I just drove through it yesterday. It was 88 degrees. Took my daughter down to look at UC Monterey Bay. I remember hiking through there during my reserve days. Good times. We used to go blow that place up. Anyway, we went through Morgan Hill, went from 65-degree weather, which beautiful, still sunny but cloudy, to 88 degrees. And this little tiny ranch, everything's original on it. So here's the deal, right? When you have a house that's original condition, yeah, you might have updated the floors, but look at the tile, look at the cabinets. Stainless steel. There's no stainless steel here. All the appliances are white. You're not going to get a ton of people that are jumping through the hoops to buy this house. I mean, look at that lamp. Nothing wrong with the house at all, right? Single pane windows, probably doesn't have cooling. It is 1,900 square foot, listed at 1.3. Took 54 days to sell because they didn't price it right. Probably because the seller said, no, my house is worth 1.4. And, the listing agent said, hey, let's list it low and see what happens. And nothing. They got crickets because condition, market condition, location. It's on a corner of DeWitt, even though it is DeWitt. DeWitt's a busy street. It's an avenue, right? You get a lot of through traffic here. Right, take a look here. This is the library right here. Yeah. So you're going to get a lot of traffic here. Again, nothing wrong with this house other than it's in original condition. So just keep in mind when you're pricing out your house, remove the ego. You have to look at logic, and you don't say my house is worth this much. The buyer will tell you how much the house is worth. I can't tell you that 100 times, but seems to be every time I talk to somebody about selling their house, they think their house is worth X because the house down the street, which is completely updated, brand new pool, brand new coping and paving, and brand new kitchen, sold for 1.8, and your house is still in original condition. It's dependent on the condition of the house at that point. Period. All right, let's talk about numbers. Insurance, guys. Insurance. Not that one. Where is it? Property insurance and its impact on consumers. Now, this is coming down the pike. We're going to have a report in 2 days about what's going on with the insurance. Now, look, I'm not siding with the insurance companies, but understand the insurance companies are for-profit companies. They need to make a profit. And when they have cost of living, cost of repair, cost of labor, cost of materials going sky high, and inflation's going sky high, that means your insurance has to go sky high to match wits. It's just like when you say, hey, we want to have minimum wage at $17 an hour, while your sandwiches are going to cost $17, $18 per sandwich. That's because you have to pay rent, you have to pay utilities, you have to pay labor. And every time you increase one thing, labor, everything else goes sky high. Every time you print trillions of dollars, inflation goes sky high. So just it is what it is. And in Florida, I'm not sure. This is what I heard and saw. Hurricane insurance is like $10,000 a year. It's just not tenable, right? It just that they're looking at losing possibly hundreds of billions of dollars in the latest hurricane. We don't know yet because that'll come out. But Hurricane Ian last year, I think, said it was like 41 billion, which was a lot of money, right? So I'm not sure what's going to happen. We're going to find out more about this, and I'd love to talk about it and have a debate on what's going on. Okay, Fannie Mae and NAR forecast 6% by the end of the year, and NAR says 5.6, and Fannie Mae says 5.4. So that's actually good, but it doesn't matter because what's going to happen is there's still a lack of inventory. It's not the problem. The problem is there's a lack of inventory. Now, if we, now, granted, we still have houses that are sitting on market 100 days, right? Those houses are overpriced for the location, for the market conditions, for the condition of that property, right? It doesn't matter. There's still a chunk of properties that will consistently go and sell fast. And that's what we're talking about. It's the majority of the houses. I mean, look, we just closed 116 houses in Santa Clara County this last week. 81% of them were over list price. I'm sorry, 81 of them, or 69% of them, were over list price. Hang on a second, let me get this big again. So there's still a huge number of houses that are priced correctly and in good condition and that are going to sell well because of the location, the condition, and the way they're marketed. Right? The Santa Clara County, sorry, I'm trying to find my thing. This number right here, this should be about 16, 17, 1800 to have a good balanced market. And we've been under 1,000 for the last 2 years. That's the problem. That's why it doesn't matter what the rate is. If it goes down to 6.3, if it goes down to 5%, it doesn't matter because people are still going to buy. What's going to happen is the seller is going to make more money on the house because when the interest rates go lower, buyers enter the market. That means there's more competition. And when there's more competition, prices go higher. All right. Bank, when there's more competition, prices go higher. When there's more competition, prices go higher. So while I hate having 7%, I think it's smart for us to keep it at 7% until we dwindle this out. There's another reason. It's because we're going into an election cycle, and we have to have low rates, we have to have low inflation, we have to have low cost of living in order to make the voters happy. That's just the way it is. So, okay, there you go. 3 things you need to know. Future of homeowner insurance rates are coming down. Doesn't mean wait, means this is the time to buy now because there's less competition now. When the rates go down, it's too late. When the rates go down, it's too late. The because people will enter the market. More competition will enter the market and prices will go up. We don't want that for you. If you're struggling to buy a house now, I say buy a house now. Oh, but Vito, what happens if the market collapses? It's a chance you have to take. It doesn't matter, because in 10 years, it won't matter. All right. If you want to look at the rates that I show you there, these are not quoted rates. You have to talk to my lenders about real rates, get qualified, etc., to get a better value of rates. But rates right now are coming down just a tad bit. They're going to continue to come down. And gas is going sky high. I don't know what to tell you. I mean, where is it? I had it here. Well, let's just take a look. Oh, it is that. No, that's not it. It says the lowest rate is $4.59, but I didn't see it. There it is. Okay, here's a little map of everything. And I can tell you, just looking at here, 469 San Tomas Aquino. This is, no, that's down here, 469 on Redmond. That's cash price. Yep, 489, 475. Oh, the Arco, that one's always low. Costco is 489. It's crazy, right? All right. Prices are going up. Cost of living is going up. Title theft is on the rise. Guys, it's going to be my mission this week to continue to push this. It's a blog, it's a video, it's a podcast. Listen about it. Listen to it. Please take the time to listen and protect yourself if you're a homeowner. All right. Hope that helps. I'm Vito. You learned 3 things you have to know about living in Santa Clara County, Silicon Valley. I'm Vito with Abitano. We'll see you out there.